today's hot sheet, I'm discussing housing inventory data, the best week to buy in 2025, the wage growth outpacing rents and mortgage payments. Today is Monday, September 22, 2025. I am Byron Lazine, and the hot sheet starts now. (6:30 a.m. live from Arizona here at the Talking Stick Resort in Scottsdale. Love my Pacific time, folks. I love doing this at 6:30 local time with you. It's a pleasure to be with you here in Arizona for BAM Camp Arizona, happening in just 2 days. For those of you that have we've been sold out for 3-4 weeks now, that have previously reserved your ticket, your spot, whether it's the VIP, the mastermind, or the general session. Looking forward to seeing you on this Wednesday, 2 days from today, here in Scottsdale, Arizona, for BAM Camp Arizona. Looking forward to seeing all of you guys. All right. Obviously, no setup here, so just kind of doing it raw. I won't say the other word that popped into my mind. Hotel. Actually, I have pretty good lighting here with the morning sun coming in, and looking forward again to being here with you guys all week for the hot sheet for those that can't be out here at BAM Camp. A lot of news going on, obviously, from a hotel lobby in Orlando at Sirhan. We did the Thursday morning breakdown, rather, of the Jerome Powell conversation, what he said about housing, what he did and didn't say about the future of rates. And we've seen what's played out. This was my fear with Powell all along. I knew he'd cut rates, but my fear was that, he did, just doesn't know how to send good signals to the market, that's precisely what would happen. He would send mixed signals. He would lack a plan. He would lack confidence. And we've seen what's happened with the interest rates since that time. Haley, if you want to just pop up the interest rates, because we talked about it on Knowledge Brokers Pod for, a couple of weeks where, Lisa and Lisa will be here at BAM Camp, kind of go back and forth on this a little bit. I think it's all about, the lack of a plan here, that what's being priced in. And if you zoom here, 6.35 is where we ended the week. We'll see what happens today. There's no indication with where the 10-year is that we're going to bounce off of this, but 2 days in a row of 6.37, 6.35 after having a year-to-date low of 6.13 before Jerome Powell started to speak. He speaks and these rates go up because the market's they just don't have a plan moving forward. Who does have a plan? Well, before I get to what we typically talk about on a Monday, which is the inventory and some of the other topics of the moment, we'll get to housing inventory as we cover every single week. But there was some Wall Street Journal breaking news this morning. Remember, Wall Street Journal said there was going to be an acquisition of Berkshire Hathaway Home Services, BHHS agents, a lot, who are friends of mine, kind of pushed against. That's not happening. That's not true. That was absolutely true. There was negotiations between Compass and BHHS. That is 100% true. And I'll just leave it at that. But the deal for BHHS, because listen, let's face it, Berkshire Hathaway Home Services is a very profitable mortgage arm. They don't carry debt to the degree that maybe other companies do. And what we've now seen is Compass go to their number 2 option. Okay. And that's clearly what this is. Haley, if you want to bring up the breaking news, Compass is to acquire Anywhere with a $1.6 billion deal. Leave that up, Haley. I'm going to actually look at where we're at right now here on opening bell. Compass's stock was down pre-market. This is an all stock transaction. Okay. So Yeah, Compass is down 9.9% rather here on the opening bell. But who's not down is Anywhere stock, HOUS. It's up 59.5%. And that's about where they both were pre-market. So opening bell, Anywhere is up 60%. Compass is down 9%. Okay, initial reactions here. I'll have further reactions this week. But initial reactions are when Wall Street looks at this and says, "Wow, Compass stock moves down, Anywhere stock moves up." Well, because Compass, and you can take this off the screen, Haley, if you'd like. Compass is absorbing Anywhere's toxic debt. That is what now Anywhere has great brands. So sometimes you take on debt, even toxic debt, like Anywhere had, in a trade-off for great brands and what you can do as an operator moving forward. We know Robert Revkin is a very confident operator. And so what can Robert Revkin do with brands like Coldwell Banker and Sotheby's International Realty and Century 21, just to name a few? So there's many brands under the Anywhere umbrella. So they've absorbed that debt. So when Wall Street looks at the Compass stock, they say, wow, you just absorbed a lot of debt. And operationally, we're going to need to see, Compass, how that plays out in the future, how you're willing to operate. What brands are you getting rid of and what brands are you keeping? What are you rolling into the Compass brand? And what are you going to leave alone? Are you going to leave the Sotheby's International Realty, the Coldwell Bankers of the world alone? I'm not, alluding to any moves that Compass, I have no information of what Compass might do. Or are you going to roll everything in over time to the Compass brand? Or are you going to treat this as a parts company, get rid of some parts? I think, if I'm guessing, there's going to be some parts company mentality here. Like, we're going to keep the good parts, maybe even keep some of that branding, and then we're going to chip away at some of the other things that Compass may not need in this acquisition. But Wall Street's looking at this and saying, wow, Anywhere, you got somebody to take this debt off your hands. Boom, stock goes up 60% here, 59% here on the open. We'll see how that plays out throughout the rest of the day. And then Compass's stock is obviously down on this news because Wall Street's got to see how this plays out. This is a $1.6 billion deal. Now, to think Anywhere with all the brands that Anywhere has, Corcoran's one of the brands, Century 21, Sotheby's, Coldwell Banker, ERA, to think about all the brands that Anywhere controls, and they only sold for 1.6 billion. It's a small number. It's a number that showcases a lack of profitability over time, a lot of toxic debt. Okay. It's an all stock deal that tells you Anywhere had no leverage in the negotiation. This is a bailout from Compass, so to speak. When it's an all stock deal, now granted, that might be the best deal for the shareholders. There's a belief that maybe Compass can grow this over time. But an all stock deal, like, you're not getting paid more than theoretically what you're worth with cash, where you can access that right away. It's going to create a combined company with an enterprise value of roughly 10 billion, which is including debt. Each share of Anywhere common stock will be exchanged for 1.436 shares of Compass stock. Hence the pre-market move on HOUS on Anywhere. Wall Street rushed into that knowing that they're now getting this 1.436 exchange rate on the Anywhere trading under HOUS into Compass. Okay. This values Anywhere stock at about $13 per share, which right now on the bump is 11.26. So theoretically, there might be, this is not financial advice, but there might be room there. Obviously, the pre-market Wall Street, the algos kind of ate up most of that opportunity. Had you bought Anywhere on Friday, you would have been in a great position. Compass shareholders will own approximately 78% of the combined company. Anywhere shareholders, remaining the 22%. And that'll all live under the Compass, ticker. COMP is the Compass ticker. So Anywhere shareholders owning 22% now of what is going to be Compass stock as this move happens have no decision making in the company. Now there's great leadership across the brands, obviously at Anywhere. There's a lot of folks who have been in the industry a very long time. There's a lot of people that know how to navigate the different obstacles that are going to be in front of Compass now. The number one volume company buying, I think it's number one volume buying number two. Yeah, these are the Compass and Anywhere were the top two brokerages by volume in 24, according to Real Trends. Compass 231 billion, Anywhere 183 billion. So the gap between now number one on volume, billions and billions sold, versus number two, it's exponential. I've said this a lot, and I'm just giving you guys some random thoughts because the news is obviously just breaking. But I've said this a lot. We've seen a lot of consolidation in this business, but we haven't seen anything yet. You are going to have monster companies, very big market cap companies. When you look back in 4 or 5 years, people think the consolidation of the last 5-10 years of, MLS is going from over 1,000 to 600 was consolidation in our industry. No, you haven't seen anything. This company in particular, Andrew Undum sent me a text this morning. He said, a company of this size might have a lot of influence over MLSs. And that Compass wants to have influence on MLSs. Huge move for Compass to be able to pull this off. Remember, though, this is their number two choice, Berkshire Hathaway Home Services, which didn't have the debt that Anywhere has, was the number one choice. That was a real negotiation. It wasn't a great deal for Berkshire Hathaway Home Services ultimately, which is why they walked away. And this deal, why did Anywhere do a deal? 1.6 billion, small numbers for, what did Corcoran sell? I don't know, Haley, if you want to look at what did Corcoran sell when they sold? If somebody could look that up, what Corcoran sold for. And I think Corcoran's a great brand. But Barbara Corcoran, what she sold for, and then what Anywhere just sold for, and that sale was a long time ago, so valuations are different, obviously. 1.6 billion for these brands. It shows you how poorly operated the financials of Anywhere was. Oh, 66 million. I thought it was higher. Okay. That was back in 2001, though. That would obviously be a different bit. NRT obviously was a rheology brand, now Anywhere brand, 66 million. Okay, I thought it would have been more. Regardless, 1.6 billion is not a lot of money in the grand scheme of things. It shows you. This was the number two volume conglomerate, holding company in brokerage, and everybody recognizes all those brands. And so where's the value in real estate? Well, the value is in the ancillary. And this is a real fight now for ancillary. And I know Robert Revkin's been playing a very specific game. He's got to get into that game now with the Rockets and the Zillows. I mean, Redfin sold for $1 billion, a little bit over $1 billion, whatever it was, but Mr. Cooper sells for 9-10 billion. That's where the money is. Okay. The money's not in the real estate brokerage side. Okay. That's a pathway to the customer. And I said this on Sirhan's stage, and I've said it many times. I'll continue to say it. Your clients that you think are your clients because they've worked with you in the past and because you send them a birthday cupcake, they're not your clients. Okay? This is really hard for some agents to understand. They're not your clients unless you start to treat them like, I would send cupcakes to my 8-year-old turning 9-year-old's birthday party. If my financial advisor sent me a cupcake, I would fire him. I don't need you spending time sending me. I don't even like cupcakes. They're cute. They're fine. We have got to understand that the offers our clients are going to be receiving from companies like Rocket and Zillow, and now Compass being a $10 billion market cap company. Homes already sends brochures to sellers, letting them know about the offers that they have. Hey, your agent didn't tell you about this? The offers are going to get substantial. They're going to be creative. They're going to be good. They're going to be strong. And loyalties in this business are going to wane. Just because there was a hello every single day at the local mom and pop, dollar store, Dollar General. There was a General. I used to ride my bike to a general store in my neighborhood. It was called the General Store. It's not there anymore. But these local shops weren't loyal. The folks in the towns weren't loyal enough to these shops, to the hello, to the exceptional service that these shop owners provided, to the local feel. When Amazon said, we'll just put the package on your door within hours and it'll be cheaper. Loyalty changes up really fast when the offer is so sexy, you can't turn it down no matter what you do. So these moves are going to create, and when we look back 3 to 5 years, the monster companies, and everything that you're doing now is in preparation to really compete with what's going on, to create the right partners, maybe, perhaps, all of that. All right. Compass buys Anywhere, all the debt with it. They're going to have to prove that they can operate these brands at a better level than Anywhere. Anywhere basically took a bailout. Listen, I'm saying things that are going to maybe even trigger some people that they took a bailout. They had no choice. They had toxic debt. Anywhere CEO President Ryan Schneider, we are excited to unite our renowned brand. They didn't have a choice. So the spin is going to be one direction. Anywhere didn't have a choice. We'll see what now Revkin decides to do with these brands. He may come out and say, I'm going to look to Ryan to make some of these decisions. It's going to be all his decisions. Don't kid yourself. Don't play patty cake. Leave that for the cupcake people. Understand what's going on here. This is a very big move, and it's because Anywhere didn't have an option. Okay, inventory for the week. As we do every single week, we look at the housing inventory and see if we're getting any gains. So, Haley, if you want to go to that, inventory right now, it's up 20% more than last year. Now, we've been up over 30% at times this year. So this is a shrinking growth trajectory that we're on, now only at 22%. We peaked at 33% earlier in the year. And, for the past week, we gained about 2,500 more active single family listings than we had last week. So last week was the big jump up week that we were expecting based off of, the holiday week. And we only get 2,000 more here this week. So inventory continuing to sit. We didn't get the jump up on new single family listings to really help out. We got about 2,000 off of last week. This is a little bit more than we saw this time last year. So a little bit more new listings coming on to the market, but still really trending where we've been the last couple of years. These are, basically really low numbers on new listings. Historically speaking, we're running at about 41.5% of listings right now are doing a price reduction. So 41.5% is back to where we were in 2022 at this same time period. 2022 was obviously the market reaction to the rapid increase on rates as the Fed was playing catch up to which they thought initially was transitory, couldn't figure it out, couldn't get their head around it, even though they created it, had to rapidly increase rates. And what did we see? Sellers kind of freak out. A lot of would-be sellers froze. Those that were on the market that had to sell, had to move, really started to increase those price cuts. We're back at the same level. So it shows you the mixed demand in the market, the weakening demand on the buy side, which we've seen here for a couple of years. Mortgage purchase applications coming into this week in a pretty strong place. And you can see we've had multiple weeks now of double-digit growth here on mortgage purchase application index. We've had 20 consecutive weeks of double-digit growth year over year. 33 straight weeks of positive year-over-year data. And so mortgage applications really doing well. If we look at weekly pending sales, that came in at 62,000 according to Altos Research. We're still not seeing a significant different. We're kind of like, just slightly above where we were last year, which ultimately means existing home sales are continuing to crater around that 4 million mark. Remember, Fannie Mae is projecting 2026 to be a better year, an over 10% increase on that number. It's not showing up in the pending home sale data right now. That's your weekly update on inventory. So market's just kind of hanging out in the basement, moving slowly. We're not seeing enough inventory. That's going to suggest massive price pressure. Yet, the interesting part about this is, even with the increase 20% more than last year, we're not really seeing that level get soaked up by the market. There's not as much demand. There's a longer closeout period. And we're seeing that show up in existing home sale data. All right. It's that time of year. It happens once a year, and this kind of reporting comes out twice a year. Best time to sell back in April. And now all of a sudden we're talking about the best week to buy in 2025. Realtor.com did the reporting. Haley, if you want to bring up the BAM article that we have on this, you can get this obviously at nowbam.com. According to Realtor.com's 2025 best time to buy report, the sweet spot for buyers is coming up. It's October 12th through the 18th. Okay. So you might be thinking about this, like, why, when I look at my market, because this is common in a lot of markets, that actually the buyers that bought in December, get the lowest price. They get the best deal because we're thinking money. And that's how most buyers, how can I or that's how most sellers actually think. How can I save them or make the most money? But buyers aren't always necessarily thinking about money. They're thinking about the right home. Most of the time, that's what they are thinking about, the right home, how they're going to live there, family, all those different dynamics. So here's the reason October 12th to the 18th, Haley, if you scroll down, is the best time to buy. Is this offers buyers more listings, because if you think about December, you have less inventory on the market right there, Haley. You have less competition, obviously, in October than you do in April, which is why April every year is the best time to sell. And you have a potential savings of over $15,000 on median priced homes. Okay, so you've already seen the deceleration of prices. We've seen it this year in particular, but you see it by the end of the year every year, right? That's why you look at what was the annual price, but at any given time, the buyers who buy in April pay significantly more than the buyers who buy in October. Just look at June prices versus December closeout prices. And so there's a balance here of why this week is the best time to buy. Come December, there's not going to be as many options. So if you're a buyer looking for more options to be able to negotiate more, this Realtor.com is identifying as the window October 12th through the 18th. So we'll take a look. There'll be more. There's some charts and whatnot in school for BAMX members, so you can grab that. Obviously, go to school.com/BAMX to grab access to all of the hot sheet show notes and charts each and every single day. All of our new done for you content as well every single day or every single week is uploaded there. Okay. We've got that Redfin report on wages. I'm going to bump that to tomorrow. Haley, let Vanessa know we're up against it. So we'll bump that to tomorrow. BAMX members, we've got a live role play. It'll be 6 a.m. Pacific time. I'll be ready and excited to go there. So if you want to get access to the role plays, myself, Tom Tooley, Shinati do a role play every Tuesday for members only, 9 a.m. Eastern, 6 a.m. on the Pacific Coast. Go to school.com/BAMX. Jump in tomorrow, 6 a.m. West, 9 a.m. East, combined or a BAMX only, members only role play. And then 9:30 East, 6:30 West, I will be doing the hot sheet as we gear up for BAM Camp on Wednesday. Looking forward to seeing a bunch of you guys there. If you haven't had the chance, you didn't get a chance rather to buy BAM Camp before it sold out, you didn't get a chance to come last week and see me in Orlando, come check me out in Denver in October. Okay, there are still tickets for the Fusion Rally. That's going to be 30 days from today. It's October 24th. There's a link down below for the Fusion Rally. Use code BZ25 and actually get 50% off of the early bird just for being part of the BAM community. So these tickets are available. I'll be doing a keynote the morning of October 24th in Denver, Colorado. If you're in driving distance, no brainer. Use the code BZ25. Come out and see me. And I know we've had so many requests over the last 3-4 weeks of people want to get into BAM Camp because it's sold out. And, you know, one, we're sorry because there is a capacity and there's going to be an element of standing room at this event as it is right now. So we couldn't make any exceptions in that manner. But if you're in driving distance, short travel, or want to come into Denver and fly in 30 days, come check me out at that event, which is the Fusion Rally, and use the code BZ25 so you can get that deal there. All right, 10-year starting out here this week, up over 4.1. Let me just take a final peek here. Yeah, 4.137. We're not going to get much of a move here on the 30-year fixed rate, I'd imagine. And so, listen, those windows of time, they are very small when you get those low, near 6% rates, as we've seen multiple times the last 3 years. That window has shut. the minute Jerome Powell opened his mouth. And so now we're back at 6.35, below, certainly below the 50-year trend of 7.5, and, decent in consideration of other places we've been the last 3 years. But we had a momentum killer last week. We'll see as more data comes out how that impacts. I'm watching what investors do more than, how much Jerome Powell can screw this thing up. 6.35 is where we ended the week on the 30-year, and we're back up over 4.1 on the 10-year. We'll see where it all ends up. I will see you guys back here tomorrow, probably on tomorrow's Real Word Pod. Have some more conversation on Compass acquiring anywhere. If you're just tuning in, I did share my thoughts quickly, briefly at the opening of this. Make sure you subscribe to this channel. Anytime there's new information, we're going to talk about it here on the Hot Sheet. Typically, we're talking about the economic factors here on the Hot Sheet that are impacting housing and all of those changes, but just wanted, obviously big news for a lot of agents. Wanted to give you my quick rapid thoughts. Make sure to subscribe to the channel. If you listen to the replays on Apple or Spotify, love for you to leave a review for the Hot Sheet Pod. Thank you guys. See you tomorrow. Until then, toodaloo.